Good morning, traders. I hope you guys had an exciting week yesterday. Now, a brief one, yeah, understanding definitions and the rules when it comes to trading. We look at the box, we look at the direction of a trend, we look at the patterns and signals that presents itself. Now, today, as you all are aware, on WAP on Discord, I give a signal to buy the GBP NZD and to really get technical with it. Now, why did I say traders should get technical with buying? Okay, if you notice, I said get technical in buying. Why did I say that? Because I understand that before you buy a market, before you buy any market, before you buy or sell any markets, you have to be um, very careful with your entries. You can see buy GPNZD and get really technical with it. Same with Euro NZD, get really technical with it in buying. Yesterday's trade, you can see here, getting technical with buying a market that is set up. A false break reversal back inside of the range. We need to go in little and wait and observe the market. As the market evolves, we add. We try again, we add. We add. Before you know what's happening, you've added a lot of size and you are in profit. Understanding and following the rules. Now we have the signal GBP NZD. If you notice, my entry is 0.1 before 1. That is to say, I have gone in with size. Okay, go in little, size immediately. Now, on the same with the Euro NZD, you go in little, size. Now you can see the market moving in that direction properly. Gradually, we'll be monitoring a GPNZD very strong. These are the only positions I can take for now, so I can manage other markets I have an entry in. Okay, now let's look at the balance guidelines. Now, when I talk about the guidelines of balanced market, I re-emphasize on let's open the Bible, the trading Bible. Let's search for the balance guidelines of balanced market. A market wants more information before it begins the next directional auction. Remaining within balance defines the balance or tightens the balance. The tighter the balance rate becomes, the greater the odds that a breakout from that balance will be more dynamic. Go with the breakout from the balance. Okay, fade or go against a failed breakout. Following a failed breakout, the odds sharply increase that the market investigates the opposite extreme of the balance. If the opposite extreme is reached, reapply the balance trading guidelines. Good. Now we have it here. Okay, the market forms a box. Remember what I tell you guys. The market forms a box, but within that box, I think last month or so, I drew on my book, and I explained something to you guys. I always repeat myself. When the market forms a box and we have a false break reversal and we have an inside day inside of that box, we would see a false break reversal trade setup. Now this market broke out. This is a 1 hour time frame, no fugazi, no noise, very clean. You notice something. The market gave a false break reversal and it gave a trend bar. This bar you see here, I didn't get the entry here. I did not enter here. Okay, I did not enter here. Okay, but I entered up here with little size, little. I entered here. Okay, the market pulled back to the moving average. Okay, it pulled back to the moving average and reversed, and I started adding size, and we're currently here. Okay, so this is just sorry guys, this is just as simple as it can be. Understanding that box, when the market returns back inside, when the market stays outside, an inside day is a signal day. We look at defining the inside day. Inside this gives two setups on the day: a false break reversal or a trend trade continuation. That false break reversal can be in the direction of the trend. That false break reversal can also be against the overall trend. We can also have a low-hanging fruit reversal or a low-hanging fruit continuation in the direction of that trend. That is the setup. So when you have an inside day, you have to reason and understand your strategy. What defines your strategy? What makes that strategy lovely? What makes you love it? What can you see? Are you following your rules? Are you following the rules? AUD USD yesterday I bought. Why did I buy? You hear me talk about what? Area of agreement. Okay, you hear me talk about area of agreement in the ebook. An area of agreement is a zone where computers hardly recognize what is going on. Okay, the market goes back in balance. We had the edge of the box reversal. Remember, I told you I am Mr. Edge of the box reversal. The market built. Look at day one: Monday, Tuesday, Wednesday, Thursday. It breaks out of Monday's low. The next day breaks out again. It breaks out again. 3 pushes to previous day's lows. And what happened? We had a false break reversal. I did not trade here. I did not enter here, but I entered here. And we had our take profit reached yesterday. Okay, we're out of this market. Now this market has proceeded to give a false break reversal back inside of that box. So the market is currently trading in balance. This is just the market is in balance. So this is why Stacy talks about trading outside. So you have to pay attention to when you are inside. Okay, but when you are inside, false breaks can be the beginning of large explosive moves inside of that box. If you do not have your indicators for opening range, high and low, please get that. The balance guidelines will help you in your trading. Euro Swiss franc. Now, I sent a signal to sell Euro Swiss franc in the private channel, the signal channel. Now, if you look critically at what I said, use technicality, sell Euro Swiss franc. It can be a breakout test of closing price. Be careful, but we need to sacrifice to make more. Now look at this. I've gone in with 0.1. It's being technically aware and wise that while you are looking for a setup, you need to use your wisdom. So if I lose 23 USD, it means nothing, because GBP NZD has given me over 300 US dollars. Euro NZD has given me over 300 US dollars. If I lose $23 out of that profit, it means nothing. So what do? We go in little. But if I had gone in with size and this market reverses against me, I can lose my 600 US dollars. Do you get this video? I want you guys to understand the importance of trading little. I'll show you a video from Stacy. Let's take a look at SB. Let's go to Stacy. Stacy taught me this. Basically, Stacy is the person. Who is this Stacy? Okay, Stacy Buck Trading. Go to playlist. Go to.
Hi, I'm Stacy Burke from Stacy Burke Trading. Would you like to know the?
No. Let's see. That video should be somewhere. inside this playlist.
Hi, I'm Stacy Burke from.
Using micro lots to master
Here's the big secret
forex
about
trading.
women. We want you to flirt with us. We even want you to.
Yes, so use micro lots to master the forex trading process. So from micro lots, you start growing and being able to load your boat.
Hi, I'm Stacy Burke from Stacy Burke Trading. Today we're going to be talking about scaling in size and how to trade without focusing on the money. One of the great things about Forex is that you can use micro lot accounts, and if you're already trading and you're losing money, go back, stop your trading right now, go back and sit down, look at your whole methodology and your money management. The great thing about using micro lots is that you can use a lot size that's equivalent approximately of 10 cents US a pip. And in doing so, what that can allow you to do is get very detailed with your record keeping, your journaling, your entries and exits of your trades, and your risk, your drawdowns, all the things that will help you improve. And the purpose of this is, number one, it gets you in the process of keeping well-maintained records. It gets you in the process of journaling and keeping an accurate account of your day-to-day trading. But most importantly, the whole process of using the smaller micro lots is that you can start to get a track record of whether or not you have a positive expectancy in your trading. If you're not using an automated or an algorithmic system where you've done some sort of expectancy with a computerized system, this is a really great way, especially if you're trading a discretionary model or an end-of-day model, to where you can start to really get a firm grasp of the actual trading process itself. A lot of people out there might say, well, what's the point in that? I don't really think that paper trading or any of that has any real value until there's money on the line. And micro lots are a great way for you to really have a reality check, especially if you have an accountability partner, to take your records, even if it's in 10 trade size samples. So for example, you might do 10 trades, give those records to your friend, give the next block of 10 trades to your friend, and keep a record that way so you can see you've got, I've had 6 winners, 3 losers, 1 break even, or 5 losers, 4 break even, and 1 winner, whatever it is. But at the end of the day, you need to have a positive trade expectancy, and using those micro lots shows you where either there's an illusion in terms of what your results are showing, or what you think you have an unrealistic perception of your own trading ability. That's the reality, is that at the end of the day, your expectancy is whether or not you're performing and your system's going to produce
So yes, now that's that. Now what I learned from this is this. Many years ago, I came to understand that, okay, yeah, all right, I've been using micro lots. Most of my micro lot trades will go in my direction. Okay, now I started to think, if I had added to this little first entry, I would have made more than what I've made with the micro lot. So what I did was this. Okay, my records are there, how I organize my trades. I enter little and I let it run. Okay, I don't go more than 0.01 lot. Okay, so I thought to myself one day, the day I traded oil, there's an oil trade that made me a significant amount of money years ago. That oil trade surprised me. The market moved. I went in 0.01. I think on oil, 0.01 lot is like, it's not even a $1 lot on that broker. Prices were so high, and my entry, my stop loss was, I think that 0.01 lot was equivalent to like $20. Yeah, $20 for that particular trade. I was like, wow, this is crazy. I normally trade forex pairs, and this 0.01 lot can be smaller, depends on the volatility and the prices of the market at that time. So round numbers also helps understand when prices are very high. So I was like, okay, good. I think from the way the market is going, let me increase my lot size. I increased it. I placed same stops. The market moved away from that second entry. I entered another entry again. Well, I kept on adding and adding and adding. Before I knew it, that market became an ACB. I never knew that was called an ACB. That was actually a 3-day setup that reversed, and I never knew it was called an ACB. But it was a magnificent one, because from that day I now got the idea and I wrote it down that from now henceforth, if I'm not sure, I'll go in little, then look to significantly add positions to my entry. Okay, so yes, back to this trade. Woo! Euro NZ GBP NZD. Let me see. Okay, good. Yes, it's going well so far. Euro NZD. Okay, that's fixed traders and continuing the direction. Still going positively well. Euro Swiss 0.1 lot is in a $2 profit. I haven't added size yet. Let me move my stops to be a $10 stop. The prices are very high, so selling at that top there is quite expensive. So yes, so let's see how I may lose the Euro Swiss franc trade and I'll have a good one on the other pairs. Now, if you take a look at, I think there's a pair operating with balanced guidelines, the NZD card. I told traders yesterday, those of you who did not attend the meeting yesterday, that the market is in a trading range, and the market will move from low to high, from high to low, from low to high, from high to low, from low to high, from high to low. So if the opposite direction, the opposite area of that balance is reached, we have what? A market that will reverse back to investigate the opposite edge. Okay, so now traders who saw these, congratulations. The market tested the open, tested the close, and has continued back in the opposite direction. So trading range, when you are trading the trading range, go to the ebook, look at trading ranges, high to low, low to high, 3 levels up, 3 levels down, 3 levels up, 3 levels down, 3 levels up, 3 levels down. Let's look at our 3 levels of rise and fall. Now we put on our round numbers. Yes, let's see 3 levels. All right, now let's look at our price in the box. Yes, this is my specialty. We have 25, 50, 75, and 00. So now we are trading inside. For those of you, my early students who knows what I'm doing right now, I'm sure you know and you've seen it that Gakuna has taught us this over and over again. So we are in it. This is 250. If you add them up, those of you who know how we normally do it back in the day, I do it like this. So 25, okay, 50. Yes, my mentorship student will be looking at this now and be like, boss, you haven't showed us this. Now 3 levels of rise will fall, especially in the trading range. We'll get to that in our next class. Now, for me, I just make things as simple as possible. I don't like stressing myself. 100. So when you add them up inside the box, price is inside the box. From Monday's low, opening range low, to the current high, we are inside the box, and it's in a trading range. If you go to the ebook, go to round numbers, 3 levels of rise and fall. Now when you measure this, now you start getting the argument traders normally argue. You start getting 75. So traders will say that is 25, 25, 25. Oh, all right, yeah, but for me, I have a different point of view and an easier breakdown than you. So yes, now 250, 3 levels of rise. Now let's take a look at the ebook again. Let's look at 3 levels of rise. There are so many things in this book I've put together. Traders need to really read and study. Now 3 levels of rise. Good. So understanding how far the market moves on a Monday can help us form a thesis about how the market may be setting up. 3 levels of rise or fall. For currencies, we have 75, 150, 250, 300, 3 times the levels. Now we go back. When this criteria is met, we tend to see a reversal in the opposite direction of that box. They may exceed, they may not quite get there. Okay, so we have expanded knowledge on that. Yeah, so 3 levels of rise is equals to 75. Okay, it may move 125. Okay, for major pairs, 25 pips equals to 75 level. So you've seen me calculate that now on your screen. It's 75, it's 250, it's 75. When you add it up manually, just like I did back in the days, it gives you your 3 levels of rise. So 3 levels of rise from low of week, from the Monday's low to Monday's high, 3 levels of rise reverses. That comes to our opening range initial balance setup in the ebook. Opening range initial balance. Okay, now you see that opening range initial balance reversal, patterns on the open. Okay, let's go to opening range initial balance. Another example, when Monday pumps it, Tuesday dumps it. That's what happens here. What happened here? 3 level up, 3 level down, reverses that box on Tuesday. So there are so many setups, so many knowledge that most times when I look at my screen, you can see me adding them up. When I look at my screen, I calm myself down not to confuse myself because I know too much. Now same thing here again, 3 levels up, 3 levels down, same setup but different criteria. I think we need to go to the other one. Opening range initial balance, opening range. There's lots of stuff here on opening range. Now another one, the market trades down to the opening range low, 3-day setup inside the template reversal. Let's take a look at some old patterns here. Good. Opening range initial balance reversal, opening range initial balance, false break reversal back inside of the range. Another setup again, opening range initial balance from the low, opening range initial balance again, Monday, Tuesday reverses it. Opening range initial balance setup has a 3-level movement, up and up, high and down low. 3 levels of rise will fall, 3 levels of fall will rise. Let's take a look at these two. 3 levels down, 3 level up. When the market goes out of balance and stays broken out, you can see that example. 3 level up, 3 level down, trading range. This happened years ago. So 3 level up, 3 level down, 3 level up, 3 level down, 3 level down, 3 level up, 3 level up, 3 level down, 75, 50 to 25, 75 double zeros, 25 and 50, 250 up, 250 down, 250 up, 250 down. So after 250 up, 250 down again. So 3 levels of rise will fall. So this is what is happening here. Congratulations to traders who studied me when I roll out this course. So this course is very simple. It's in the ebook. Read it. Use your round number levels at the side of your screen. Monday's opening range, especially in trading ranges, 3 levels will help you get massive trades. Like you will make a lot of money, and people will be asking you, your colleagues, traders will be asking you, how did you do this, man? So yes, 3 levels up, 3 levels down. Same thing here, 3 levels. When the market has formed that box, you can see now we are inside a 250 box. If you check very well, I teach this 50, 75, 00 is 25, 250. We're inside 250. Now we are trading inside 250. Price is inside the box. It always trade inside of a 250 pip box. It's always inside. If you use your price range to, it's 75. It's as easy as that. Opening range, initial balance, reversal. Okay, they pump it up, they dump it. They pump it up, first break, reversal, they're dumping it back down. The market is trading inside of 250. Okay, 3 levels of rise or fall. Same thing here in the trading range. The market is trading inside of, okay, the market expanded. Now for this market Monday, we have a very well established range. So let's see how many levels. 1, 2, 3, 4, 250 plus 100, 350. The market has exceeded. We have a false break reversal. Those of you who saw this sell setup back inside of the range, congratulations. Now if you use the price range tool, you will notice something. All the way to 100, you see that is a 100 pip box. Hold on, which is 350. 3 levels of rise that has exceeded. It has exceeded 75, so we have what, 100. But when you add it up as simple as I made it the last time, you can see we have our reversal back inside of the range. The market down 6, using the balance guideline to investigate the opposite direction of that range. Okay, so congratulations. Wow, USD Euro Swiss franc is showing signs of proper movement. Let's look at Euro Swiss franc. Euro Swiss franc, although it's a strong trend, let's be careful by using micro baby lots. So the baby lot is still running. If they break through, our H4 rules will come into play. Peak formation high, do not counter trend the peak formation. We have a breakout leg, a first leg, a second leg that failed, reverse back inside. We had another leg, the market failed again. We have bear bars. I think sellers are taking charge, but I don't trust this market. They may keep going, I have no idea. But in the US session will be more defined. We have CHF news on the calendar. Traders, please be careful. Trade with caution. Trade with caution. Trade with caution. Be careful. Now for those of you who have seen how I trade 3 levels of rise, 3 levels of fall, the markets go with you. Do not counter trend the peak formations. Be careful. Sit on your hands and wait. You can see, let me send the screenshot of this trade entry for Euro NZD. Wow, damn man, the hard work we put into this every day, we can't mess with this hard work. Now good for those of you who took the trade, congratulations. Those of you who got scared, wow, still congratulations to you guys. If you didn't take it, if you took it when I sent it, congratulations. So I'll be sharing most of my free trades with everybody, both the Signal members, the membership, the general group, showing you guys that it is possible to do the work, to sit down on your screen and make things happen. Now if you look at this market, when we talk about the concept of round numbers in this market, you don't mess with it with Euro NZD. Euro NZD is quite more volatile than some forex pairs. But the markets go with you 1% better every single day. Remember, trade the best and scalp the rest. Buy above bull bars closing near their highs, sell below bear bars closing near their lows when the market is ready. But the markets go with you. Yesterday also I sent a signal for gold, but I was taking out a break even at this level. The market gave a false break reversal of the inside day and has returned back out of balance. But the markets go with you guys 1% better every single day. When the market is inside the box and goes to break out of previous day's high, inside of that box we tend to see a false break reversal. I hope this video gives you value. The link to the indicator, the mentorship, everything you need, the ebooks, the one-on-one, everything you need is in the description. But the markets go with you 1% better every single day. Thank you as you like and share this video with other struggling traders out there. they will learn something from this video. May the markets go with you.